Shares of First Solar have been on an absolutely insane run over the last couple of months, and that continued this week. Shares rose as expectations for interest rates fell. Some data about inflation came in. It was a little bit cooler than expected. A lot of investors are thinking maybe interest rates are going to be cut in the near future. Don't know that that's necessarily going to be the case, but a lot of times investors are going to be bidding up stocks that they think will benefit from lower interest rates before really asking questions. So I want to dig into exactly what's going on in First Solar and why I'm actually considering selling the stock. This is a stock that I've owned for a very long time. But at the end of the day, this is a manufacturing company. This is not a company that's going to scale infinitely in the tech universe. Currently has a market cap of over $30 billion, and the subsidies that are involved in the earnings that they're making are just incredible right now. So I'm going to go get to some of the numbers, why the stock maybe has gotten ahead of itself a little bit. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. First of all, let's look back at the stock's performance, because this is a really tremendous, this is a chart that shows First Solar's stock price and their market cap. Stock price is in red, market cap is in blue. And you can see the market cap is now nearly $32 billion, stock price over $300 as I'm recording. And it wasn't too long ago, just a decade ago, this was a company that wasn't worth a whole lot at all. Market cap was $4.8 billion in early 2015. So a lot of improvement from a market perspective. But is that deserved? Well, let's look at revenue and free cash flow. This is where you start to get hints of why I think the stock has maybe gotten ahead of itself. So you can see that revenue has essentially gone nowhere. The company's actually losing money from a free cash flow perspective. A couple of pieces of context there. A decade ago, First Solar was selling a lot of the projects that they built. So instead of just selling solar panels and generating a relatively high margin on those solar panels, they were actually building the entire project. For a while, that was very profitable. Then suddenly it turned unprofitable. They ended up exiting that business, exited a lot of the utility scale business. Now their main focus is really just on manufacturing solar panels and just doing that really well. So this is the modularization of the solar industry in action. We're pulling apart that vertical integration and just focusing on doing one thing really well. So that's one of the reasons that revenue hasn't really gone anywhere. But free cash flow is negative, largely in part because First Solar has gone on a huge spending spree building and expanding manufacturing plants. So that is worth digging into because it's that future growth that investors are pricing in right now. Before we get to some of the growth metrics and what we should be looking for going forward, I do want to highlight that the stock price increase has happened largely in the absence of any sort of real news from First Solar. This is the company's news releases. So you can see some partnerships. They have some module sales. These things are kind of business as usual, earnings report, but there's nothing major. There's nothing really earth shattering about First Solar that you would say, hey, you know what? This company is worth 100% more today than it was yesterday. Even the first quarter earnings report was relatively unchanged from a guidance perspective from just a few months earlier. So net sales unchanged, gross margin unchanged. Some of the things that did change was the pace of capital expenditures and then the ultimate cash balance that they're going to have. But one thing that I want to highlight here, because it's really easy to look at First Solar's net income, their profitability, their free cash flow, and be really impressed with what the company is doing recently, how margins have increased, all that kind of stuff. But I do want to highlight the benefits from Section 45X. So this is part of the investment tax credit that was passed. We forecast Section 45 tax credits of approximately $400 million in the first half of the year and $620 million in the second half of the year. So when you look at gross margin, about 50% of that gross margin is from tax credits. And they even note that here. Note number two right here assumes $1 billion to $1.05 billion worth of tax credits. That means that more than half of the operating income from the business, about 2/3 of the operating income from the business is from tax credits. Why is that important? It's important because tax credits are not necessarily sustainable forever. If, let's say, the election goes a different direction in November, it's possible that these tax credits can be undone. I don't necessarily think that's likely, but these sort of credits and subsidies have gone up and down over the years, not only in the US, but in Germany, in Italy, in Japan, in California. all over the place. Subsidies are extremely volatile. So if you're valuing a company based on the subsidies that are getting today, the safe assumption is that those subsidies will be different in the future. Maybe higher, maybe lower. But I think we're probably at a peak from a subsidy standpoint for First Solar. With that said, there is a lot of growth expected for the company. This is their expected nameplate manufacturing capacity each year through 2026. So they have a number of different expansions, a lot of them happening in the US because of those subsidies I talked about earlier. So expecting to increase from 16.6 gigawatts of capacity to 25.2 gigawatts of capacity. This will give you operating leverage on the business. A lot of the contracts that they're signing for a lot of these sales are going to be pretty high margin. So you would expect that their margins, even without subsidies, are going to maybe expand a little bit. So this is what investors are anticipating and already pricing in, is that you're going to have margin expansion, you're going to have top line growth, and as a result, you're going to have bottom line growth as well. The chart on the right is just what they're actually expecting, not just nameplate capacity, but how much production they're actually expecting to have. You can see that the US goes from 4.4 gigawatts, triples to up to 12.7 gigawatts by the end of 2026. So this is where the excitement is coming from. If there's increased demand for energy, for solar energy particularly, on the back of artificial intelligence, all of these other things that are increasing energy demand, First Solar should be one of the beneficiaries. But the price is really the question for me right now. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Let's put some of the valuation into context, because I totally agree. First Solar, great company, great manufacturer, has a lot of growth tailwinds behind them. The question is this an appropriate price to pay for the stock, or should we be taking money off the table? Because that's what I'm considering right now. Price earnings multiple is 31. Enterprise value to sales multiple on a trailing basis is 8.5. So that's a very, very high multiple for a manufacturing company. But I talked about estimates for 2026. What are analysts actually expecting, and what are we paying more than 2 years out? Well, this first chart shows the revenue estimates and the range that analysts have. You can see that even on the high end, at $7.25 billion worth of revenue, First Solar's stock would be trading for more than 4 times revenue in 2026. What about on an earnings basis? Well, the range here for earnings goes from $28.30 per share to $32.95 per share. So that's going to be essentially quadrupling what they generated in 2023. Maybe reasonable, depending on what happens with subsidies. And at that price point, the stock will be trading for about 10 times earnings. So that seems like a pretty reasonable multiple. But here's the issue that I generally have with First Solar. And I've been through a lot of these cycles. I've been covering the solar industry very, very closely since 2010 and been following it since going back to as early as 2005. And what we've seen is that what is valuable today is rarely valuable in the future. So First Solar builds this huge valuation, plans a bunch of manufacturing expansions. Over the next few years, something is going to change. Some sort of competitor is going to come into the market and undercut them. We've heard this from manufacturers coming out of Asia, that a lot of the residential solar installers are starting to say, hey, we're expecting component costs to actually come down in 2024 because there's a ton of supply coming from countries like China. Now, there may be tariffs and all kinds of complications that go with that, but there's definitely going to be competition. So what I question is the fact that First Solar is going to grow as much as they are on the top line, and we're going to get margin expansion. And a lot of that margin expansion is going to be due to subsidies that may or may not go away in the future. It looks like, based on analyst estimates anyways, the company is trading for a relatively reasonable multiple. But that multiple, especially on the bottom line, assumes that margins are going to go up significantly by 2026. That's something that we have not seen be sustainable in the industry. So this is where my red flags are going off based on historically what happens. Companies that get really valuable and get very highly priced in the solar industry, that's typically the time that you want to sell. Maybe I'm learning this lesson a little bit late, but that's what I'm really considering right now. Have not sold anything yet, but I may over the next couple of weeks if this stock stays where it is. So that's where I'm thinking with First Solar right now. But let me know what your thoughts are. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.